All right, guys, today we're going to be talking about the significance of learning how to trade ranges, because the truth is price 99% of the time is ranging. And yes, even within this push to the upside, there are ranges. So we're going to get to that. Make sure you watch till the end. So here we are on the 4-hour time frame on Bitcoin, and you could see that Bitcoin ranged for about 10 days or so prior to our recent breakout to the upside. Now, the reason this is important is because most people will say this is so boring, Bitcoin is consolidating, da da da. However, as we are scalpers, we can look to take advantage of this sideways movement. We can look to short the highs of the range and long the lows of the range until eventually the range breaks in either direction. In this case, it broke to the upside. Now, ranges are not too difficult to identify, especially as they are developed. What I like to do is use the Fibonacci retracement tool, and I'll show you my settings here in a second. But I like to mark out the high and the low of the range using my Fibonacci tool. It's just a little bit easier for me to identify and for me to see. However, based on your own preference, you can identify the highs and the lows of your range using a horizontal line, using array, whatever it is that you want to do. These are my fib settings. So you just have the 0 on, you have the 1 on. I have a very slight background tint just so that I know when I'm super zoomed in that I am in the range, but this is completely preference. You can choose whatever colors you want, whatever. All right, so we identified our range in hindsight, and now we can say objectively, whenever we're at the high of the range, we should be looking to short, and whenever we're at the lows of the range, we should be looking to long. What else can we add to our range? Well, there is something called the fixed volume profile tool, which I will give you guys a new video on it separately. But whenever you are analyzing a range, we need to make this not extend right. Whenever you are analyzing a range, you can also look at what is going on within that range in terms of volume. So whenever you're in my live streams or in my videos, you will typically see me pull this tool to identify what is considered fair value with the range. Whenever you are at or above your value area high, you should be looking to short. And whenever you are at or below your value area low, you should be looking to long. Now remember, your ranges will continue to range until they don't. And yes, that sounds obvious, but we should always assume that your range is going to remain intact. Look at how for 10 days here, we were in this range. And if you had the idea to always short the highs, you would have had 2 very nice shorts here. And if you had the idea to always long the lows, I mean, you would have had quite a few long trades here at the lows. All right, cool. Now that seems easy enough, but I want to talk about how can we identify a range that is forming. I want to show you how after we have a significant move, whether it's to the upside or to the downside, we typically start to range. This means that after every single move, you should be trying to identify a brand new range because, hello, brand new ranges are the easiest things to trade, and it's so much fun when you know how to find them. So we're going to continue using this 4-hour range as our example, but we're going to delete our range, and we are going to use the replay tool to before we started ranging. If we move forward, at this point, we can start to see that we're breaking out. Okay, it is our job right off the jump, whenever you have a move, especially if you miss the move, please don't FOMO, especially if you miss the move, to try to identify your range. Now, there's a couple rules when it comes to the range. First things first, for example, if we come on the 8-hour time frame, this is not a range, right? It doesn't look like a range. So come to a lower time frame until the time frame that you're on looks like a decent range. What is a decent range? More than a couple candles, okay? This looks like a pretty decent range to me. You could do this on the 15, you could do this on the 10, you could even do this on the 5-minute because it looks like a nice range. You don't have a million candles on the screen and you don't have 2 candles on the screen. It's a nice, healthy medium. There is no right, there is no wrong. What should we be looking for? Now, we went a little bit too forward, so we're going to go back here and I'm going to show you guys how I would try to identify the range. The first thing that we do as soon as you see a breakout happening is follow along with price action and adjust where your highs and your lows may be. So this is our current high at the moment. We're going to move forward. All right, Bitcoin continued moving higher. What are we going to do? We're going to move our high to the high of the candle. I probably shouldn't have used the trend line, but it's too late now, okay? So as soon as we put in what we might consider a significant high, we should be hunting for the potential range low. Let's take a look at what happens here. All right, So at this moment in time, we can say that this is our range high and this right here is our range low. And remember what I said, you should always be looking to short the highs of the range and long the lows of the range, no matter how, what I'm going to say, young the range is, okay? I hope you know what I mean by that. This range is only, an hour, give or take, old, 2 hours old. So we're going to call it a young range. And these young ranges are the best to trade. So we should always be looking for longs at the lows and shorts at the highs. Now, I'm going to adjust those lines using my fib tool because it just looks nicer to me. And what I'm going to do is I'm going to pull my fixed range profile, right? Like we talked about. And I'm going to pull it from the first initial swing high. Okay, so this happened to be the candle that created the high of my current existing range that we are trying to identify. So this is what we're looking at. Now let's move forward and see what happened. Okay, so you can see that this 5-minute candle now broke the previous high. However, it was unable to close above the high. Okay, this is something called an SFP, which I will do another video for. But in this instance, for purposes of identifying our range, because the candle was unable to close above and because current price action fell back within our range, we will now extend our range high to the high over here. Okay, so this is our new range high, not this guy. Why is this important to identify? Guys, every single day I teach you guys to follow the money. And whenever you have put in a new high with a big wick like this, there is liquidity there. Whoever is shorting in this section would have their stops here. So why does this candle come up and reject and come back in the range? Well, it is literally just to sweep the liquidity. Remember, anybody that is shorted in this range will put their stop above that high. So this is simply a liquidity grab. And these are the first two trades that you can look for in any range, is a liquidity grab of the high and a liquidity grab of the low. Range theory suggests that whenever you sweep the high like this, or whenever you're at the high of any range, you should be looking to rotate down to the low of the range. And whenever you're at the low of the range, you should be looking to rotate towards the high of the range. This is simply how ranges work until eventually one side breaks out. So let's move forward and see what happens. Look at that. They swept liquidity again. And not only that, but price came back within the range. So what do? We extend our range to the upside, and we're still supposed to be looking for shorts in this area. By the way, quick pro tip that I forgot to mention, for your fixed range volume profile, whenever you have a new range especially, make sure you extend right so you don't need to keep dragging it. All right, once again, they swept liquidity. We are going to increase our range. Let's keep moving. All right, we forwarded a little bit there, but we got more wicks to the upside and price falls back within the range. So we are going to extend our range. And so this is how you can start to identify the range developing as it is developing. If price just breaks out of here, then this range is no longer valid. And so you can see that this is how we can start to try to identify a baby range and perhaps trade the entire lifespan of the range before it breaks out in either direction. This is a 5-minute time frame. What happens right now if we just break out and don't ever come back? Well, then this would be a shorter time framed range, a little baby range that we broke out of, and we wouldn't be paying attention to it anymore. So you could delete all this and redo this entire process up here whenever the next place we range is. However, that's not the case, so let's continue moving forward. Now, as we move forward, we're going to extend our range, right? It's very important. We need to know that we're still within the range. And so you can see right off the jump, if you are potentially expecting your range to come back and fill this low, then at these highs, you should be looking to short. There should be no FOMO longs, definitely not at the high of a range. All right, I forwarded a little bit too much here, but let's talk about what happened here, okay? So let's talk about what happened here. So we broke out, and it was not an SFP, okay? It was not a swing failure pattern. So what would we do in this instance? Well, until we fell back within the range, we would actually not extend the range to the high of the range, okay? Because this was the move which could have continued to break us out. Remember, we were following this at first on the 5-minute time frame. Now I moved over to the 10-minute time frame because we're getting a pretty significant amount of candles here. So the range essentially is aging. Now, would we necessarily be looking for shorts up here? If you know how to trade and you're a little bit more advanced, yes, you could. However, this could have been, as I mentioned, the significant breakout to the upside. It is only when the price fell back within our range, in which case you can say, all right, this is not our breakout. I'm going to increase my range to accommodate the new price action. And so now you can see that these highs that were once high are no longer the highs of the range, and now this is the new high of the range. Because people that are shorting here, for example, don't have their stop losses above these highs anymore. They now have them above these highs. So let's move forward. So what would we do in this instance? We would expand our range and say now this is our new range high. And we are still within what's considered premium price action. Okay, so I think you guys get the point. When you're at the lows, you should be looking along. When you're at the highs, you should be looking to short. And most of the time, the ranges don't break out, as you saw from these examples here. Now, if for whatever reason you're ever confused by this, you can use a different range template, which essentially includes the 50% line. If you double click it, you can see 0, 0.5, and 1, okay? The 0.5 line is the equilibrium or the dead center of any given range. And it's important for the simple purpose of understanding context, okay? Because right now, I mean, $51,000 for one Bitcoin is high relative to where we've been in the past year or so, but it is low relative to the all-time high at 69K. So which is it? Well, this 50% line can give you context as to what is considered high and low for our range. Remember, when you're trading ranges, we don't care about 69K. We don't care about 30K. We care about 51K to 53K. And this 50% line indicates what's considered premium price versus a discounted price. Anything in the top half is considered a premium, and we should be looking to sell in premium. Anything below the 50% line is considered a discount, and we should be looking to buy in a discount. Think about it. If you have an iPhone and you can sell that iPhone for $2,000 up here and buy that same iPhone back for $1,000 down here, wouldn't you rather buy it for $1,000 and sell it for $2,000 as opposed to buying it for $2,000 and selling it for $1,000? I mean, I sure would. And so as the range continues to develop and we continue to not break up or not break down, we will call the range aging, okay? That's not an actual trading term, but we'll call it aging because I like to make my own terms, why not? So look, the same thing happened here at the lows. We broke down, but we did not have that follow through, and we continued back up within the range. So where would our range be? Well, it would be from this high up here down to the low that is down here. And we would analyze this volume. We'd pull our fixed range volume profile and we would say anything down here is a discount. We are looking along. Anything up here is a premium. We are looking to short. Obviously, the lower it goes in the range, the better it is. And obviously, the higher in the range it goes, the better it is because you have more returns that you can make on your trades as prices in the more extreme ends of the range. All right, so I'm going to come on the 2-hour time frame here, and I'm going to really fast forward to illustrate my point. Look at this. Every time you're at the high, you want to short, and every time you're at the low, you want to long, and hey, that's easy work. And so prior to our breakout, this would be the range, right? Now, what happens when we break out? Well, like I said earlier in the video, this range is no longer relevant, so we're not going to worry about it. And wherever the next range starts to establish itself, which is right over here, we're going to play the exact same game. So this does not look like that good of a 4-hour range. It looks probably better if it was a 30-minute range or a 1-hour range. And so what's our current price actions range? Well, this is our high and this is our low. And you can say that whenever you're at the highs, you should be looking to short. And whenever you're at the lows, you should be looking along until it breaks. And then, hey, eventually it'll break. And if you short the top one time, you'll take a loss, no problem. This is how it works, essentially. It's very easy. What's a little bit more difficult is understanding the time frame aspect of it. In the beginning of the video, I mentioned that 99% of the time, price is ranging even amidst a middle of a pump. Well, let me show you this. On the 4-hour time frame, you can see that, I mean, Bitcoin didn't really stop here on the 4-hour time frame. However, take a look at this little black candle right here. What is this candle? Well, on the 4-hour candle, it doesn't really look like much, but on a lower term time frame, this is absolutely a range. So let's jump down to the 15-minute time frame and investigate my little box here. Look at that. This little baby range happened amidst our macro pumpage. And if we do the exact same rules that we learned, and this was our range high and this was our range low, you could have traded this little baby range and said whenever you're at the lows, you're going to look to long, and whenever you're at the highs, you're going to look to short. Now, maybe you would have gotten a short here, maybe you wouldn't have, I don't know, but this range is a very young range because we were only here for a couple hours before continuing our move to the upside. And when we broke out, what do we do with this range? We cross it off. It's no longer important. And we move on and try to identify another range. Look at this. Another range that was formed amidst our massive pumpage. So yeah, we did have a huge move to the upside, but did you have opportunities to get in? Well, absolutely you did. If you just always look to long the lows and short the highs, you could have had a trade here. You could have had a trade here. You could have got in here, here, here. So this is why 99% of the time we are actually in a range. I mentioned time a few minutes ago, and this is where things can get interesting, okay? Because we're back on the 15-minute time frame, and this is our range, right? But you can also clearly see that there are ranges within ranges, all right? So you can see that this here is also a range. And depending on the time frame that you're on, will depend on where and how many ranges you can see. You can find these things all over the place. So whenever you are trading ranges that are on low time frames like this, you need to understand where you are in the more macro grand scheme of things, okay? So you could jump down on the 5-minute time frame and trade this range exactly how I said, shorting the tops and longing the lows, but you need to really understand that within this smaller range, you have a much larger range, and we should, as per the much larger range rules, be looking to short because we are in the top half of the range. In other words, the premium section of the range, and we don't want to be selling our iPhones for $1,000 and buying them down here for $2,000. So while it is acceptable to long the lows of these smaller term time frame ranges, it is a lot better for you to look for the shorts and hold on to the shorts a little bit longer because we are able to identify where we are on a larger time frame. So now this is going to help you with FOMO, because if we have a large move to the upside, you know that you can just pull a range on whatever time frame makes sense. And this is why 99% of the time we are ranging, because even in this move up, look at this. If we come to the 2-minute time frame and I find my where we were here, look at this. On the 2-minute time frame, you can find ranges. You can pull these things literally anywhere. This is the same range that we just talked about, but this here on the 2-minute time frame, mind you, it is very small and I don't recommend doing this, but the idea remains because it could last a little bit longer. So this is a little 2-minute range, right, that you can see very clearly. Here's a little 5-minute range or 2-minute range, whatever time frame you want to look on that you can see very clearly. So this is really going to help you with FOMO, because you're never going to say, oh man, I'm missing the move. Just identify the range. And if you think that we're going to continue breaking out, look, here was another range. If you think that we're going to continue breaking out, then you just look to long the lows and short the highs. Look at this. We had another baby range. So nobody really is allowed to say that, oh man, I just FOMO'd in YOLO long, no problem. Just wait for your range to identify. Do as I showed you in the beginning of this video, and then you can enter your trades confidently despite us being in the middle of a massive up move. And so that's how you can not feel any FOMO. That's how you can enter confident trades and really trade on any time frame. So whether you're a scalper or you only have 1 or 2 hours a day to trade, or you're a day trader and you're in front of your thing all day, you can decide which time frames you want to trade on based on what you're seeing in terms of the candles. This here, remember, like I said, this is a little baby range within our more macro range. So you can trade this and say, all right, I'm going to hold on to the shorts a little bit longer. When you're down here at the lows, If you can find a range, this is a little 2-minute, 3-minute range right down here. So why can't you trade this the same way that you trade everything else? Well, you can. You just need to know that if you do that, you are at the lows of the more macro range, which is this guy here. And so you should be prioritizing your longs over your shorts. And look at this. We deviated the low, as we know ranges do. We were unable to close below that low. We know that if you cannot close below a low, we will typically rotate to the other side of that range. Not only did we rotate to the other side of that range, but because we know that we should be prioritizing longs, we held on to the longs a little bit longer, and up and away we go. What's the problem? So I hope I'm making my point here. I hope you guys can understand that you can find these ranges literally all over the place. And I want to leave you with one more very large range, okay? So again, we're on Bitcoin and now we're on the weekly time frame. And you can see that Bitcoin right now, believe it or not, is ranging. Trading ranges is absolutely the most important skill that you can have when learning how to trade, because it builds you context of where you are and you know when you should be looking for longs and looking for shorts, no matter where you are. Guys, if you like the video, make sure to like and subscribe. Every single day I teach you guys why the market moves the way that it does. That's all I got for you. Happy trading, stay disciplined, and that's curtains.